Now lately, Tesla stock has been skyrocketing due to its 5-to-1 stock split last week. And lately, as of last Friday, the S&P 500 added 2 stocks to its index, but Tesla stock was not added. And in this video, I'll be covering the top 3 reasons why I believe Tesla stock was not added to the S&P 500 Index. And also I'll be covering, most importantly, what does this mean for investors or people who are trading the Tesla stock. So if you're someone that is holding a position in Tesla stock and you're interested as to what exactly will happen or what will happen next to your investment, then you don't want to miss this video, guys. Guys, I'll be breaking down my top 3 reasons what impact this S&P 500 Snub has on the Tesla stock. So stick around, guys, and we'll jump right into the video. So welcome back, guys. So let's jump right into it, guys. This is a very short video, so I wouldn't be playing around. I'll just jump right to the point on the top 3 reasons why I believe what are the implications on what was the reasons for Tesla stocks not being added to the S&P 500. So the very first one, guys, is volatility. Tesla stock is a very volatile stock, and as you guys know, Tesla stock trading about $400 as an ATR, average true range of about 32. Now that's a very high number. It means that every day the stock moves about 32 points, either up or down, which sends a message that the stock is highly volatile. And I know the stock even earlier in the year was trading at a higher ATR than that as well. So for that reason, that's one of the reasons why I believe the S&P 500 Index or the committee did not include Tesla stock as part of their index, because when a stock is so volatile, it affects the index overall. I mean, when you look at your news, whether it's Bloomberg, CNBC, you'll see this, the index, they want to make sure that the index can be as stable as possible. If it's going up, they like the index going up. If it's going down, that's fine. But they hate to see the index just be so volatile. And Tesla is one of the most volatile stocks because it's heavily traded. There's a lot of FOMO going on the Tesla stock. So I believe the S&P 500 committee looked at that and say, you know what? We want to make sure that this stock stabilizes a little bit more. So we'll probably give it some more time so that it gets stabilized, and then we'll consider adding it to the index. And not only that, giving it some more time will give them the opportunity to see whether the company can maintain 4 consecutive earnings of profitability, which is one of the requirements to be added to the S&P 500 Index. So Tesla stock, this is a huge hurdle that Tesla stock has to overcome, and they need to get the volatility under control, because if you look at the valuation for this company, it's just way too high. You look at the amount of profit that this company is making for the stock price, way overvalued. So that's my number 1 reason why I believe that the committee did not accept Tesla stock into its index. Too volatile. Number 2, large investment has to be placed. So with an inclusion into the S&P 500 Index, there's a rule that requires investors, that's the index investors, to purchase a certain amount of shares within a certain amount of time. I think it's a few months. I think for Tesla, they will have to purchase about $120 million worth of shares within short order. And considering Tesla's price, the stock price and the valuation is so high, a lot of these investors will be hesitant to put this kind of investment into this stock. So that was number 2 reason why I believe that the committee did not allow Tesla stock into the index, because it's overvalued. That's one. And I think a lot of investors will struggle as to putting their money into the Tesla stock at those evaluations in the short period of time that they'll be required to do so. So that's my number 2 reason. The amount of money that has to go into the stock in short order. The 3rd reason is, guys, the EV, electric vehicle space is heating up right now. I mean, there's so much competition that Tesla will be faced with. I mean, there's NIO, there's Nikola, there's Xpeng, there's Lucid. There's so many companies striking up right now, and I'm talking about striking up at production level, meaning they have cars that is driving, and is giving Tesla a run for their money. A lot of people are still saying, oh, Tesla is still the leader, which I believe they are with certain technologies, but their technologies, companies are coming out with better stuff than Tesla, guys. I mean, I like Tesla. I think ultimately I'm debating to buy a new car right now because my truck is, 7 years old. So I'm looking to, get rid of my F-150 and get myself a Tesla. I was looking for the Tesla truck, but it's another couple of years before it's available. I don't want to keep my truck that long, so I might buy the Tesla SUV, I think the Model X, I believe. So I'm debating right now. I'm waiting to see. So I like Tesla. Don't get me wrong. I'm not against Tesla in any way, but to not get off track here, the number 3 reason is the EV competition. The competition is heating up, and Tesla will be faced with a lot of competition, which can drive the price down potentially because of the competition. So the S&P 500 committee looked at that, look at the competition in this space, and they want to give it some time again to see if things will even out, which will affect the other points that I mentioned earlier. So EV competition is number 3, guys. So the last question that I know most of you are asking, what does this mean for my investments? Now, for your investment, if you have a investment in the Tesla stock, I think now's a good time to start shaving off. Well, last week was a good time to start shaving off some of your position, because a lot of people buy and hold, and I think these companies will go to the moon, right? And Tesla stock, I think it went to the moon. So now it's still a good time if you bought early. Like I bought some Tesla stock back in March in the lows, and 3 weeks ago I took off. I sold my position in Tesla. I mean, there's no guys. You buy low, you sell high. You don't buy low, the stock goes high, and you're still holding. What are you holding for? Like this company isn't making a ton of money, so why would you keep holding, your Tesla stock? I have friends who own Tesla stock at different prices, 800, 900 before the split, and they're still holding on to the stock. I had some conversations with them and said, hey, now might be a good time to sell. They said, no, we're not selling. This thing's going to the moon. It's like, okay. I mean, maybe it goes to the moon and you make a lot of money, or maybe you lose your money. I remember, to give you guys an example, with the marijuana stock craze a few years ago, I bought like Aurora's shares for about $1.40, and that stock went to about $14, $15, and I was hesitant to sell, and the stock just plummeted back down. I think I sold at $11 as it started to come back down, and then the stock went all the way back down to $1, I think about a year ago. So guys, these are bubbles, and you need to understand that there's the marijuana bubble, there's the EV bubble, and I think the EV space, Tesla specifically, was in that bubble, and I think that bubble will pop, and the stock will correct itself. Like I said, long term, I see these, EV is the future. I mean, people will be driving gas cars, and in a few, 10 years from now, I think the dominant vehicle on the road will be an electric vehicle. So Tesla has, great potential, but in the short term, the medium term, I think the stock will correct itself. And if you have investment, you might want to consider that. Now, I'm not a financial advisor, so you guys still do your own due diligence before you make any financial decisions, right? So I think that's it for this video, guys. I'll wrap things up. Now, if you're new to the channel, guys, remember to smash that like button, subscribe. That's the only way we can grow the channel, so I can continue to provide you guys with high quality content like this one. And until next time, see ya.